I was going to take a closer look at the pressure on Nvidia shares today when I asked Shia Sissel, the founder and president of Barron Capital Management, about the stock. She said, "I think a pullback is healthy in the stock right now. It's had a lot of momentum and run up quite a bit. Its valuation is getting a little frothy, but that's also based on estimates which have been way off to begin with. But I do think it's healthy to see the stock pull back after its split. It appears to be a healthy response to the pause in Nvidia's trajectory, especially after you sent over some notes that help frame this historically. You know, when you go through this day by day, you forget some of the history of this. You saw a lot of the retail market get into the stock, pushing it further for the rest of the year. I anticipate that it will kind of take a breather right here, and then it will continue its momentum upward as long as it continues to report very strong earnings as it has, and there's no reason to believe that this won't be the case moving forward." With Nvidia's market cap of $754 billion last year and where it is now, it's been quite the ride. They just keep making these chips, despite the fact that many claim that demand is outpacing supply. Given that shares have increased by an astounding 25,000% in the last 10 years, it is not surprising that Nvidia depends on stock splits to keep its stock price reasonable for individual investors who may not have access to fractional shares. Even better, the firm added another trillion to its value in a matter of months, so the split had no effect on Nvidia's $3 trillion market cap. This led a number of Wall Street analysts to reiterate their bullish positions on Nvidia stock in spite of its recent decline, and raise their price targets following the stock split. Jim Kelleher of Argus Research is one such analyst who increased his price target on Nvidia stock to $150 from $110, implying an upside of nearly 20% from where the stock is currently trading. Vivek Arya of Bank of America is another bullish analyst on Nvidia stock. He even believes that the stock is undervalued. In today's video, we'll discuss the rationale behind the analyst's calls and the reasons investors should buy more Nvidia shares without hesitation. However, before we do that, if you'd like to stay up to date on the most recent developments from both Nvidia and the stock market, we invite you to subscribe to our channel, Investing Tutorial. Click the bell icon button if you don't want to miss the most recent updates regarding the biggest changes and market catalysts. Returning to today's video, Shia Sissel, the founder of Barron Capital, was asked if she believed that investor psychology might be at work in this situation before we spoke further about the following layer or leg of the investment. If you're a long-term investor, I believe you hold the stock and take advantage of downturns like today to buy on weakness. That being said, I believe it will be nearly impossible for NVDA to continue growing at the rate that it has been growing. Or if there is some buying fatigue, especially when you consider the profit margins where Nvidia is now, is that potentially a trigger finds some of the profit-taking and states that yes, and I personally would not sell the stock here. I saw another analyst make the valid point that if you were to look back a year and see what the PE should have been for NVDA, you would have to assume that the company would continue growing at the same rapid rate. However, since the company also increased its earnings by 2,000%, even that point is moot. Instead, you could look at its current PE, which is about 50 based on forward earnings, and say, maybe that is not accurate because they're going to do better than that. And while I don't think it will happen, I also believe that we shouldn't discard a stock that, in the opinion of the Argus analyst who upped the stock's price, is likely to expand at a rate of over 100% annually for a number of years to come. Target praised Nvidia for its incredible performance in the previous fiscal year and stated that, in his opinion, the company is well positioned for continued momentum into the upcoming year. He also believes that Nvidia's stock still has a long way to go because of the company's position in the field of transformational AI technology. What's even better is that he concluded his note by advising investors to start or increase their positions in Nvidia stock, stating that in the era of deep learning, artificial intelligence, and GPU-driven application acceleration, the majority of tech investors ought to be Nvidia owners. In the meantime, a Bank of America analyst stated in a recent CNBC interview that he sees no signs of a slowdown for the chipmaker. In fact, the analyst argued that Nvidia is very likely to maintain a massive lead in the AI race over the coming years. The analyst explained that this is the norm in the tech world, pointing to social media and operating systems as examples of areas where this is commonplace. Shares of Nvidia under pressure again ended the week lower by 4%, but Ben Reitzes from Melius Research just raised his price target on the stock for the fifth time this year, this time from 125 to 160. You will notice that the leader keeps 80% of the market, and he thinks it will be no different in AI. He also talked about how some people compare Nvidia's amazing run to the doom boom, pointing out that this is a big mistake. Let's look at what he had to say and discuss whether Nvidia stock is a buy. These transitional phases apply to the other two $3 trillion stocks that are currently trading on the market. Most recently, Microsoft switched from Windows to be a productivity company, and Apple switched from the iPod to the iPhone. Ben Reitzes responds, I think they're the closest thing to nailing it in AI, so far obviously by creating an ecosystem that developers love, and they know they can be relied upon to grow, and that's a really big thing. When asked what transition he believes, Nvidia must and can make to maintain and grow this $3 trillion market cap to 4. We're in the midst of a paradigm shift. Nvidia is the Microsoft and Apple of those previous regimes combined into one. That's what you really need to consider, and they're just getting started. They may have the most runway out of all the major players, but they still need to shift more towards software, which we'll see. In addition, I think it's really cool. We wrote about it today, that they could generate over $270 billion in cash over the next 3 years. Nobody talks about that, but it's something that could benefit shareholders and maintain the multiple at a high level for some time. We like what we're seeing, but this enormous wealth pile will ultimately come up in conversation. We are currently in the second year of what will likely be a 3 to 5 year deployment cycle for generative AI, according to Bank of America's Vivek Arya. For this reason, he is still very bullish on Nvidia stock. Many people want to compare the AI cycle to the dot-com boom, but the analyst says that's a mistake because debt drove that error. Whereas the spending in the AI cycle is being done by some of the largest companies in the world with extremely strong balance sheets. He also discussed why he disagreed with opponents who claimed that Nvidia's stock was overpriced. There are a few reasons to purchase Nvidia stock at the current discount, but there are more. First, if you watched the entire video, thank you. The analyst stated that while the S&P 500 as a whole is trading at roughly 2 times earnings growth, Nvidia is actually trading at less than 1 times earnings growth. As long as Nvidia keeps up its current performance, the company should be able to retain over 80% of the AI chips market, which Bank of America believes could triple over the next few years. These videos needed a lot of work and time to produce, so if you find them interesting, please consider hitting the like button and subscribing to the channel. Your support will greatly aid in our growth. Ben Reitzes responded, We're not sure. Right now, we still think. Obviously, software has had a few good days. This was in response to the question. Well, arguably only 2 companies became mega caps out of the mobile revolution, right? Apple and Google. And then only 2 became mega caps out of the cloud revolution. Amazon and Microsoft. How many mega caps are we going to get or maintain out of the AI revolution? However, Nvidia is doing something truly remarkable here. They are building artificial intelligence, AI, factories, which are essentially code for software factories. Their output is software, applications, and other things that we take for granted in a different form. Nvidia's ultimate goal is to create software on the fly, which is their product that they will create with these AI factories. And if they get this right, there are trillions of TAM that should go to them in addition to the trillion that Jensen mentions. Evidently, you are aware of Nvidia. We've been discussing Broadcom a lot lately. You may have read our report there. Well, many people are searching for the second company. Broadcom is in a great position with regard to capital expenditure for custom silicon, so they're probably the closest in terms of potential competitors. AMD is the dark horse here on the hard side. We've been pushing Dell a lot. In our opinion, Nvidia's recent decline shouldn't deter investors from purchasing and holding this stock for the long term. Thus, I wouldn't be shocked if this occurred once again. The company has generated triple-digit earnings growth over the last few quarters thanks to its dominant position in the AI chip market, which it holds with 80% of the market. What's more, there's reason to be optimistic about Nvidia's growth going forward, as the company's next big catalyst is set to arrive later this year with the release of the most powerful chip to date and the potentially game-changing Blackwell architecture. Nvidia also intends to upgrade its chips every year, demonstrating its ability to keep one step ahead of the competitors. In addition, Nvidia can thrive over time because it provides a full range of products and services for AI development, rather than relying solely on its chip, which powers AI tasks. Nvidia is also demonstrating its leadership by being the first to profit from new AI growth areas like sovereign AI, which generated zero revenue last year but could generate billions this year. Lastly, it's important to remember that the AI market is still in its early stages, with analysts predicting growth to more than $1 trillion later this decade. We can conclude that Nvidia stock is still worthwhile investing and that it will continue to reward shareholders as it rises in value over time. But what do you think about the stock? Is it a decent buy at the moment? Please share your opinions in the comments section and don't forget to include your estimate of NVDA's worth. As we wrap up today's analysis, it's clear that the recent dip in Nvidia's stock price has caught the attention of top analysts, with many going all in on what they see as a golden opportunity for massive growth. Nvidia, a titan in the semiconductor industry, has consistently demonstrated its capability to innovate and lead in various high-growth sectors, from gaming and data centers to artificial intelligence and autonomous vehicles. This current dip is largely seen as a temporary setback, a rare moment when market sentiment doesn't fully reflect the underlying strength and future potential of the company. For long-term investors, such moments present a chance to buy into a solid growth story at a discount. Nvidia's robust fundamentals, combined with its strategic positioning in rapidly expanding markets, make it a compelling buy for those looking to capitalize on the next big wave in tech advancements. Moreover, Nvidia's continued investment in R&D and its strategic acquisitions are set to reinforce its market leadership. The company's recent ventures into AI, machine learning, and automotive tech are expected to drive significant revenue growth in the coming years. Analysts predict that as these technologies become more integrated into everyday life, Nvidia will be at the forefront, reaping substantial benefits. In terms of financials, Nvidia has shown impressive revenue growth and profitability, even amidst a challenging economic environment. The company's balance sheet remains strong, providing a solid foundation for continued innovation and expansion. This financial resilience, coupled with a visionary leadership team, positions Nvidia to not only recover from its current dip, but to surge to new heights. For retail investors watching this video, this dip could be your opportunity to invest in a market leader at a more accessible price point. It's important, however, to do your own research and consider your investment strategy and risk tolerance. Nvidia's growth trajectory appears promising, but as with any investment, there are always risks involved. If you found this analysis insightful and are excited about the future of Nvidia, make sure to like this video and share it with fellow investors who might benefit from this information. Your support helps us bring more in-depth analyses and tutorials to help you make informed investment decisions. Also, don't forget to subscribe to our channel, Investing Tutorial, and hit the notification bell so you never miss an update. We regularly upload content designed to empower you with the knowledge and tools needed to navigate the complex world of investing. Thank you for watching and happy investing.